Hey, my name's James Nicholson. Welcome to my YouTube channel. On this video, I want to talk about a lender that will give you a rate under 5% and you only need a 10% deposit. Now, we've done tons of videos on rates as they've been coming down from mortgage lenders, but most of them, you've needed big deposits or a lot of equity in your property, around 40%. This is a great deal. We haven't had a rate like this for a long time. It's from one of the big lenders. So we're going to jump into that and more. They've got some other rates that are around 4.3%. So this is an interesting video to know what's going on. And it's interesting to see the money market moving downwards. Now, as always, if you haven't done already, make sure you subscribe to the channel and hit the bell notification. We're nearly at 18,000 subscribers now. Every one of you subscribing really helps us. And smash the like button or tickle the like button. Do something to the like button, guys. That really helps us with the YouTube algorithm. Every one of you that does that, we get more views on the channel because of you. So thank you. So what's going on? Well, brokers are saying this is a push from lenders to get a final bit of business on the books before the end of 2023. You see, pretty much the housing market is almost closing up now for Christmas. And then it takes a little while to get started next year. Normally it starts getting busier again in the spring. So lenders want to get some lending done, or at least offers in principle and things started, because that's where they need to be. So who's actually got this great rate that we're looking at? Well, some of you say it's not a great rate. You can't compare it to where we were. This is a great rate to where we were 3, 4, 5 months ago, or at least the summer of last year. This is with Barclays. So a big lender. All of you have heard of Barclays. And this deal is really important because so many people got left behind because they didn't have enough equity. And so we've been looking at rates, and you needed a 40% deposit to get a lot of these. This is the first sub 5% rate with a 10% deposit that we've had for at least 6 months. So that is a positive step, and it's dropped significantly. So Barclays have been updating their rates a lot recently. In fact, in the last 4 days, they've cut their rates twice, which is quite a lot, which means that they really want to be competitive. So why is that? Well, when you search for something online, or you have a broker that goes out and gets some stuff for you, what you'll see is that you will go for the cheapest quote. I did it last night. So I had to reinsure my car last night. I went on Money Supermarket and then I looked at the cheapest couple of options. Now, I didn't choose the cheapest in that instance. I went for the second best because the second best included windscreen cover. The first didn't. I've got a Tesla. It's all glass all over the top. I would be terrified if that broke, how much that would cost. So I wanted to make sure that I had windscreen cover included in my policy. And so that was important that I had that. And that's why I went for that deal. Now, same with mortgage. If you are looking for a mortgage, you're not going to consider someone that's the 12th best deal, the 15th, 20th, 30th best deal. You're going to look at the first 1, 2 or 3 results. Now, some of you might look at one of the results that's maybe the second best because maybe product fees are cheapest, or there'll be some sort of penalty clause in the third one that's better, that means that it might be a 5-year deal, but there's no penalty for leaving. That could be a good deal because then if the interest rates drop, you can get out of it. So there's various different reasons. And so lenders right now are fighting over getting to the top of the comparison sites. And that's good news for us, right? As borrowers, we want them to be fighting for our business. So what's been going on? Well, they have on a 40% deposit. I'll talk about that deal first. So if you have a 40% deposit, you can get a really good rate now. This is a good rate. 4.38%. Now, it's not 1%, it's not 2%, but it is significantly better. If you think this time last year, you were looking at rates at 6.5%. 6.5%. This has made affordability increase, and that's why more people are getting approved for mortgages right now. Some of you may not have been able to refinance at 6.5%. This means that you might be able to get a new deal and get off of a standard variable rate or get something done before your rate ends. So that's good. And I think that's moving in the right direction. Do I want it to be better? Yes, I do. Of course I do. So what have we got here? So the rate for the 10% deposit, which is really why you want to know what's going on here, is dropped to 4.95%. That's really positive, guys, and definitely a move in the right direction. What does it indicate? Well, it probably means that the banks, like the money markets, they're expecting rates to go down right now. So maybe you need this deal because you need the rate that's gone at the better price right now. And there are also going to be some people that they might just wait out. They might wait out and just see what happens later in the year. But you've got to have a bit of caution with that and work out, is the standard variable rate good? Because for most people it's not. It's like 7%, 8% with some lenders. But this deal might be a good one to get yourself onto, to give yourself some certainty. So I think this is a good move from Barclays. What we're expecting to happen is Santander, HSBC to see this and to do something about it, to counter that offer. And that's really what, fingers crossed, happens. The more these guys fight, even if it goes down 0.01% each time, they doing that to get to the top of the comparison site, that's good for us, and that moves it in the direction that we want to see. So forecasting interest rates going forward, what the money markets are expecting is that by May 2024, that you'll start to see interest rates from the Bank of England and the Federal Reserve start to move downwards. That will then indicate to the lenders that we're moving in the right direction, and you'll see some more movement from the lenders and rates that you can get. And I feel that by the summer of next year, you'll see a rate right about the 4% mark. Maybe there are some lenders that we've already shared that have done rates at 3.99 just to get that headline, but they have big fees. I think you'll see some more lenders at the 3.99%, but the fees, the terms, and everything involved in that deal not being quite as high as they are today. So I think this is good. But what do you think? I want to know what you guys think about this. Who would consider this Barclays rate? Would you fix for, well, if you had the option, would you be looking at fixing this deal yourself? Do comment below and let me know. Do smash the like button if you didn't do it earlier. And what you need to do, everyone here, is subscribe and hit the bell. Let's get to 18,000 subscribers. Go and check out some more content. We've got a lot planned for you this week. Maybe start with this video right here.